demand. All right, that is your setup. As for wheat, it declined by its daily limit today, along with some other agricultural commodities. So does this mean the end of the recent run that pushed wheat up more than 100% on the UBS CMCI index over the past year? Well, joining us with some answers is Alan Kluis. He's president of Northland Commodities, and he comes to us from a very chilly Minneapolis on this Tuesday. Good morning, Alan.
Good morning, Carol. Glad to be here.
Well, it's good to have you here this morning. I mean, as we mentioned, you've got, every commodity, it feels like, plunging. You've got corn, soybeans, wheat plunging the daily limit today, the most in more than 3 months. Is it all about recession concerns in your view and really, truly declining demand?
I don't think so yet. I think it's about the flow of money, Carol. A lot of the hedge funds, index funds have been very long in the ag commodities market. They've had a huge run. Last August, we saw a similar situation where for about 3 or 4 days, the equity markets were hit very hard. It's when some of the first subprime news really came out. We have the same type of feeling today where we have the funds just basically liquidating assets, probably needing to come up some money for margin calls. And I think just like back in August, this is setting up a very good buying opportunity. I don't think the recession will be deep enough to really hurt food demand at this point.
I mean, there are emerging economies, or we need basic food needs, correct? So, I mean, you're going to still see the demand for many of these commodities, correct?
That's correct. Yeah, I had quite a few farmers call overnight that I deal with, very concerned. They didn't do anything. I did see some of the Asian markets come in, some of the buyers come in and begin buying deferred contracts on soybeans. They're not very well covered, and a lot of the international and domestic buyers will be using this break to get coverage, whether it's the ethanol plants that are buying corn, feed millers that are buying soybean meal, or some of the wheat millers coming in to buy wheat on a scaled-down basis. So this is, I think, part of the casualties you're seeing as some of the index funds are being forced to liquidate positions.
All right. So, Alan, as you said before, you see this in many cases as a buying opportunity that investors shouldn't be looking at, wow, maybe we're setting up for even more selling here, correct?
That's correct, yeah. I think the corn might be short-term very vulnerable because of the huge amount of buying that we've seen come into the market since the first of the year. Open interest jumped by over 370,000 contracts since the 1st of January. So there's a lot of buyers that have bought this thing fairly high in the last 2-3 weeks. You could have a 2 or 3 day setback. You could be lower a week from now than you are today. But if your time frame is, say, 3, 6, 9 months, I think anything bought within the next 5 to 8 trading days will look very good by this spring.
What about wheat? We talked about it being the best commodity, up, I think more than 100% or so over the past year. I mean, what about wheat? Will the rally resume in your view?
Yes, I think the new crop Minneapolis wheat, if you take that down hard for 2 or 3 days and you'd say take 60, 80 cents off of it, I think you're going to be back to a fundamental buy zone. I think that'd be my first choice. I think if you hit the new crop Novo 8 soybean sharply lower for 2 or 3 days with the acreage battle that's going on too, that'll set up for a very good buy. And so I don't think the rally in commodities is over. Commodity prices have always been cyclical. We could have a short-term pause in here, but if you look at your markets probably 3 to 6 months from now, I think this will prove to be an excellent buying opportunity.
All right, so let me just put it out to you. I mean, are the grain markets recession-proof? Everybody's talking about a recession, and that's obviously what's been dragging down certainly the markets around the globe as of late. Are they recession-proof?
I think they are. I think that the food demand that we're seeing growing internationally will continue. I think some of the Western consumer demand for electronics will pull back. I think that you're already seeing the impact on the housing market. But as far as the emerging markets, the people in China and India that are improving their diet, I don't think this recession, the pullback we're likely to go through, and some of the domestic stocks are really going to impact food demand that much overseas.
All right, so it sounds like that investors can still make money off of these commodities in your view in just 5 seconds?
Yes, I would think that my first choice would be wheat on any hard pullback. Second would be any new crop soybeans, and eventually I think that the far out contracts of hogs are also good ownership.
All right, going to leave it there. Alan, thanks for your time this morning. Have a good Tuesday.
Thank you, Carol.
Alan Kluis, president of Northland Commodities. Taking a break. When we come back, World and National News. Stick around, everyone.